Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me for this segment, we have Sara Mehle, Index Research Strategist at Nasdaq Global Indexes, to discuss an index that tracks the returns and yield of 45 closed-end funds using an index of funds approach. Sara, it's great to see you as always. Welcome back to Trade Talks, and it sounds like there's a lot to unpack there. So let's start and talk about a high-level overview of what a closed-end fund is.
Hey, Jill, good to be here. So yes, today I want to discuss a way for investors to track the closed-end fund space. So first off, I want to give a quick high-level comparison of ETFs versus closed-end funds. So both give investors access to pooled investments and trade on stock exchanges, providing the benefit of intraday liquidity. However, there are some structural differences that make closed-end funds especially unique. So unlike ETF shares, which can be redeemed or created continuously, closed-end funds offer a fixed number of shares at their IPO. So having a fixed number of shares gives the ability for these funds to trade above or below their net asset value, or their NAV, based on supply and demand. So this is referred to as trading at a premium, so above NAV, or below, at a discount, which is below NAV. So investors can buy closed-end funds at a discount for capital growth potential on top of dividends that are typically paid out on a monthly or quarterly basis. So the closed structure allows fund managers to access a wider variety of investment options, including some riskier, more liquid, and even leveraged holdings. And of course, higher risk equals potential for a higher return. And so with this higher risk, higher risk is often rewarded with higher dividends. So closed-end funds are also can be a way to generate income in a portfolio. So researching some of these closed-end fund types, just even getting to know the structure, can be time-consuming for investors. So to overcome some of these barriers, we created the ISE High Income Index as a way, again, to track the space. So the ISE High Income Index is a one-stop shop fund-to-fund structure that provides exposure to a diverse basket of closed-end funds. Currently, the basket is comprised of 45 funds across 22 different issuers, and the ISE High Income Index is tracked by the Amplify High Income ETF, symbol YYY.
Tell us more about the index methodology.
So twice a year, in January and July, potential ISE High Income Index constituents are scored and ranked based on fund yield, fund share price, discount, and premium to NAV, and fund average daily traded value. So the top 45 are chosen for inclusion and are weighted using a modified linear weighting methodology so that no one security exceeds 3% at that rebalance and reconstitution. As of June 30th, as I mentioned, the index has 45 closed-end funds across 22 different issuers. Nuveen is the largest issuer at around 19%. Right now, the indicated yield is 10.69, and on average, the closed-end fund in the index trades at about a 7.5% discount. And then the top fund type, there are various fund types, but the quarter of the index right now consists of multi-sector bond funds. And again, that indicated yield 10.69, and then 83% of the index is comprised of debt funds versus 17% equity funds. So a mix there, not just purely debt or purely equity.
What about its performance versus the Ag Index over the last 5 years?
Yes, we can take a step back and look at performance. So we're looking at total returns here. So since June 29th of 2018 through June 30th of 2023, so a 5-year look-back period, we've seen the ISE High Income Index gain 10% versus the Ag. Here it's noted by LBUSTRUU. That's the Bloomberg symbol, but here it gains 3%. So we're seeing there about a 6.5% or 7% lead there. And then when we looked at from the March 2020 bottom, so March 23rd, 2020 to be exact, we've seen significant rebounds there from those low levels. So the ISE High Income Index here is up over 64%, while the Ag is actually down almost 7%. So we're seeing some outperformance there by around 71%. And as you can see, it's not as the journey to get there is not as straightforward, if you will, just because of, as I mentioned, some of these closed-end funds can utilize leverage. So in those times of higher volatility, you can see those swings to the upside and the downside. But overall, we are seeing that long-term outperformance. And again, the ISE High Income Index is tracked by the Amplify High Income ETF, symbol YYY.
All right. Appreciate the insight, Sara. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.